Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Daybreak Asia podcast. I'm Doug Krisner. The Japanese equity market is back online after a 3-day weekend, and the Nikkei is at record high levels. Now, a portion of these gains seem to be tied to reports on Prime Minister Takaichi being set to call a snap lower house election. That would likely increase her ruling LDP seat count. Joining me now for a closer look at markets in the Asia Pacific is Bloomberg Markets Live strategist Mark Cranfield. Mark is on the line from Singapore. Thank you so much for being with us. Give me a sense of what's driving the price action in Tokyo right now.
Japanese markets were doing pretty well even before there was talk about a Japanese election, but that really has helped spur additional gains. They were on holiday yesterday, so that's why you're seeing a big catch-up today. But certainly through the futures market, we saw the indications that we were going to have a very strong start with the market. So it looks as though Japan will probably have general elections in the middle of February. You can expect that Prime Minister Takaichi, who's in a strong position, it appears, in the polls, will really reinforce spending plans, which will be good for the Japanese economy, will further boost the equity market. And at the same time, there won't be much of an incentive for them to try and talk up the Japanese yen, which is pretty weak on a global basis, at least until that election is out of the way. So investors in the equity market will probably continue to enjoy the benefit of a fairly weak currency while it's looking good for stocks at the same time. So that's why you're seeing such a good move today. And of course, in the background, there's still this ongoing tech story, particularly AI driven, which Japan has companies who are benefiting from that, just as they are in Korea and other parts of Asia as well.
So a large stimulus package combined with perhaps less in the way of trying to intervene in the currency market to deal with the yen weakness that you described. Where does that leave the Bank of Japan? They've got a rate decision next week.
There is no expectation at all from people in the financial markets that the Bank of Japan will change policy in the near term. So it's almost a dead meeting even before it starts. Although there will be forecasts that the Bank of Japan will upgrade some of their forecasts the outlooks for the rest of the year, which will be important, of course, especially on the inflation front, because they've been talking about wanting to get inflation down to 2%. It's been stubbornly higher around the 3% level, but there are signs that it's beginning to soften. And if the Bank of Japan sounds confident that they can get it down to the 2% level, in a way that's a double-edged sword, because they want to raise interest rates to the neutral level. But if inflation is starting to go down, they won't get the support from politicians to raise rates early. So a little bit of a problem for the Bank of Japan there. But in the past, they've usually been pretty straightforward. If they see the chance to revise inflation lower, they will do so. So by the time the dust has settled on next week's Bank of Japan meeting, people will probably think that we're still a very long way from achieving neutral interest rates in Japan.
So the big story that we're dealing with here in the States today, key Republican lawmakers basically speaking out against this grand jury investigation of Fed Chair Jay Powell. What have the ramifications of this investigation done to markets in the APAC?
When we first broke yesterday, initially there was weakness particularly in US assets. US dollar was a bit weaker. We saw equity futures take it really on the chin, although they recovered during New York trading. Slight weakness in treasuries, but a steepening of the curve, which seems to have sustained for the time being. What it means from global investors, they're looking at this and thinking that the Federal Reserve decision later this month is going to be even more difficult to call than usual. I mean, the Fed has been pretty split. If you look at the last two decisions, although they lowered interest rates, it was not a unanimous vote by any means. Some people were looking for bigger cuts, some didn't want any at all. It looks as though we've had Fed Williams today speaking out in defense of Jerome Powell, saying that the central bank should be allowed to continue regardless. They shouldn't be interfered with in terms of these external factors. Just get on with their job of focusing on inflation and the job sector. So it looks as though Federal Reserve officials are willing to push back. That will probably mean that they're less inclined to lower interest rates at the next meeting. So from a market's point of view, they're not going to get the kind of boost that they've seen from the previous meeting. So all in all, it may well backfire if the authorities are taking on the Federal Reserve. They may not be helping from the monetary policy point of view.
Yeah, we heard from former New York Fed Bank President Bill Dudley today, and he was saying that Powell will have a tough time backing further rate cuts because people will ask, is he doing it because the economy needs it or because President Trump wants it? So the issue of Fed independence right now is still very much front and center. And I'm wondering about the overall de-risking that may be taking place with respect to U.S. assets, despite the fact that in the equity market today, we did have the Dow and the S&P extending fresh records.
And it's not just that. The rest of the world is starting to look a lot more attractive. If you look just here in Asia, we've had Korean equities, Japanese equities, Chinese stocks all doing extremely well. They're all identifying themselves with positive stories at home. Some of that money is starting to leak abroad into the Asian markets. It will do so the same into Europe as well. So there are alternatives. And on a relative basis, some of these markets are cheaper than the United States as well. So global investors have got other places to put their money these days. It's no longer a story. 2 years ago, the story was much clearer. If you weren't in the United States, then you weren't really going to enjoy great returns. That's not the case anymore. There are other places people can go, and you can see some of these companies like TSMC in Taiwan, Samsung. We're expecting very good numbers out of the Chinese tech companies as well. So there are plenty of other companies making very large profits, doing well in the AI space. They can take away funds from the United States.
So you mentioned the Chinese equity markets. We've been seeing kind of record turnover and by many accounts, I mean, continued strength in Chinese hardware tech in particular. Is this all related to the AI trade?
It's also because the government is getting behind it as well. It is, of course, related to AI, but it also because the Chinese authorities are helping to boost lending into those areas, and they're putting their weight behind it as well. They've shown that these are key areas for the development of the Chinese economy. And when things are aligned in that way in China, that usually works out pretty well. So people won't ignore the positive signals which are coming out from Beijing in that respect. But of course, the companies still need to show they can make money, which for the time being, they are doing so. And there's a lot of optimism. You can see companies like Alibaba, the stock is performing extremely well. And this was a company that was almost written off just a couple of years ago.
And a lot of strength continuing in the South Korean equity market, with the Kospi up by more than 1% in the early going here today. Is this a trend that you expect to continue coming back to the tech trade?
It's getting pretty rich by any measure when you look at the incredible performance of the Kospi, but the chip story in particular is still very strong. It might be hard for international investors to be throwing new money at these kind of levels. They'd probably like to see a bit of a correction first, and it would probably help if the Korean currency was a little bit stronger as well. There hasn't been much of a turnaround there, but certainly any kind of pullback in these markets, Korea would be right near the top of the list where people want to get back involved. Japan wouldn't be far behind either. What
are you looking at between, let's say, now and the end of the week that really has the potential to drive a lot of the price action?
Really, the bond markets have been quite modest in their reaction so far to this fallout from the investigation into the Federal Reserve. But curve steepening would take a lot of people by surprise here in other asset classes. If it becomes more serious by the end of the week, if we see long-term yields in the US start to tick up quite a bit higher, that would really spill over. Japanese long end of the market is having a pretty bad day today. There's some local factors for that, but where Japanese yields go, US Treasuries are often heading in the same direction. It would spill over to Europe pretty easily. So by the end of the week, we could certainly have a situation where G10 long-term yields are rising fast, and equity markets won't be able to ignore that. So really, they need to get a handle on what's happening there. If they can't get sentiment to be improved in the bond market in the US, it could be dangerous across asset markets.
Do you see a little bit less volatility between, let's say, now and the end of the week in the currency space? We talked about the yen weakness a moment ago. In the early Monday session in the APAC region, there was dollar weakness as well. Are things going to be a little bit more stable here in the next few days, do you think?
It depends where the action is elsewhere. A lot of focus, of course, in the Asian time zone has been on precious metals, where there's some incredible action in gold and silver and platinum, and people have been spending a lot of time trading those and less on currencies. So it's really, is there something else to trade? Is there a bigger story somewhere else? So if the bond market or the the equity market or the precious metals have a bigger story, then FX will certainly stay calm. But if not, attention will probably switch back into, there's plenty of local stories there, whether it's the Chinese yuan, the Japanese yen, all of those things in their own right can get people excited. But for the time being, they're taking a second place because you've got bigger stories elsewhere.
Mark, we'll leave it there. It's always a pleasure. Thanks so much. Bloomberg Markets Live strategist Mark Cranfield joining from Singapore here on the Daybreak Asia podcast. Welcome back to the Daybreak Asia podcast. I'm Doug Krisner. We take you now to Shanghai, where UBS is hosting the 26th Greater China Conference. And it was there we caught up with Sergio Ermotti. He is the CEO of UBS. Ermotti spoke with Bloomberg's Stephen Engle, and the conversation began with Ermotti offering an outlook for UBS's business in China.
Last year was a quite, important year for China. I think that we saw a huge interest coming back on the Chinese market. Stock performance was great, and we see it today. I mean, we have almost 3,600 participants. You go through across the board from corporates, institutional clients, family offices, and coming from also all over the world. We see also more interest from overseas, which is indicating the momentum of the Chinese market. So I think that we believe this is going to continue. The secular trend supporting China in terms of growth in innovation, in technology, in biotech is here to stay, and investors are realizing that.
What kind of deal flow, though, are you starting to see as we are starting to see China get some momentum? You talked about the stock market, the CSI 300 up about 17% last year. So it's gaining some steam, but also outbound deal flow seems to be growing quite a bit, whether it's investing in factories in Europe or in the global south. It seems like capital is not only coming into China, where foreign interest is obviously looking at that rebound, but also the capital is moving abroad.
Yeah, I mean, look, it's a good mix of businesses, but when you look at, for example, the underweight of international investors to China, almost half, from around 2.5% in 2024 to 1.3% or so in 2025. So this is a significant change on a year-on-year basis, and this is the main driver. We continue to see a lot of activity around IPOs, particularly you saw the record IPO issues last year in Hong Kong, which are probably going to stay with us also in 2026. We see a lot of activity across Asia. Inbound and outbound M&A in Japan is up threefold. So in general, I would say that you will continue to see momentum of Chinese investors investing abroad, but also capital coming into the country.
What's going to be your priority onshore for 2026? Last year you got the full 100% securities license. Yeah. What's going to be the priority?
We are working on all of this. We also last year we also made a capital increase in our local entities, and I think this year we are now planning to launch a Panda bond. So I think that we want to continue to foster our presence in China. We have been in China for mainland China for 35 years. We have been in Hong Kong for 60 years. So this is really part of our core business. I mean, if you think about it, we are managing in the region more than $1 trillion of assets, 800 plus in wealth management and 215 in asset management. So we want to continue to reinforce that position, but at the same time, our leading position in the investment bank across the board, and where we are a leader in the region and in China, mainland China particularly, and also in asset management through our very successful joint venture with ICBC.
What can you tell us about the arranging of that Panda bond, the size and timing and the likes?
This is still to be determined, but the decision has been taken to issue a Panda bond.
So onshore versus Hong Kong or Greater China, what's going to be the emphasis onshore as far as hiring? I mean, you're very strong in wealth management, obviously, asset management. What's going to be the priority?
Well, look, this year I think that our goal is to continue to working with local universities, hiring young talents. We employ around 1,300 people in China. Half of them are in Shanghai, and the rest is in Beijing, and the rest of in Shenzhen. We probably going to add up around 100 people this year in China, and we are, as I said, we are also investing not only in seasoned professionals but also in the young generation of people for the franchise.
So obviously you still have some personnel issues on the cost reductions from the integration with Credit Suisse. That's separate from what you're going to plan to hire across Asia and in China.
Yeah, look, when I look at Asia, in general, the integration is over, is done. So I think that we completed the integration in 2024. Mainly in Asia across the board. The investment bank has been closed and asset management the same. So as I just mentioned, we are hiring both in China, but broadly speaking also in Asia, in Japan, for example. We've been expanding our capabilities and leveraging really the complementarity of Credit Suisse and UBS together, where we not only have a broader footprint in terms of capabilities, but also of geographic footprint.
How would you assess how your businesses in Asia are doing versus other regions, whether it's Europe or the United States?
Asia has been growing, very fast in the last. It's probably the biggest engine of growth in nominal terms. Is accounting for around a quarter to 30%. On average in the last 5 years of our profits. So as I mentioned, we manage more than $1 trillion of assets out of the $7 trillion we manage globally. So it's a growing, steady growing business, which when you look at the engine of growth is, GDP growth is definitely going to help. 4.5% in China is quite important, but it is a driver for growth in the entire region. We are selectively gaining some market shares in areas where we want to compete. And last but not least, this monetization, this IPO calendar is very important to our wealth management business because this is really helping us to drive net new money, net new assets into our wealth management franchise.
Well, speaking of that IPO pipeline in Hong Kong, it's been quite strong. A lot of the new economy companies, but there are also concerns of the new economy companies, whether it's Minimax or others, that profitability, just like the AI companies in the United States and Western markets, that the sustainability is not necessarily, it doesn't have a lot of visibility. But what's your views on whether we're in a bubble and how long that potentially could still last?
I don't know if we are in a bubble or not, but of course, when you see this kind of multiples and performances, you have to ask yourself, is this a repeat of what we saw in maybe in another time?
2001?
Exactly, the TMT bubble and so on and so forth. I would say that in general, first of all, our advice is very clear. Diversification, no concentration of risk around the sector. The technology and is here to stay. But we should not really mix the two issues. From an investor standpoint of view, it's very important to diversify, not to get into a trap of trying to pick up the winner or the loser. But the truth of the matter is that the first wave was probably around the technology sector. Now we're going to see how embracing and implementing AI can help other parts of the economy become more vibrant and more efficient, and that's probably going to be also the next side of the story.
You also you can't discount the fact that most of the deal flows right now are in China. The interest is in these new economy companies. Yeah. So could you kind of quantify the type of deal flows, whether it's underwriting or other types of businesses or services from your bank that are tied directly to what has been a priority of central government policymakers here?
Well, look, but this is something that is not really new. I mean, the priorities for the central government around innovation being technology or pharma, biotech, and so on, has been there for a while. So from our standpoint of view, what we are helping is in, local clients, but also foreign clients to really select the winners. I think it's quite impressive how the Chinese companies are able not only to be a fast followers, but in some cases in setting new standards for incumbents in the US. So from my standpoint of view, this is a big story to stay with us, where we're going to see probably Chinese companies, creating new frontiers of innovation rather than being a follower.
You've mentioned Japan twice already in the last 6 or 7 minutes. What do you like about the Japanese story right now? Obviously, the market's doing really well. There are some pro-growth policies from Takaichi-san, the new Prime Minister. What in particular do you like about Japan?
Well, I have to say, before year-end, I was in Japan, and after 30 years of, I felt for the first time a renewed sense of optimism across the board, and corporates, institutional investors, governments, regulatory bodies looking in a much more positive ways about the future. So I think Japan is the third largest wealth management market in the world in terms of savings. And it's quite clear to me that now that rates are coming up, and there is a new paradigm that is there to stay with us, and I do believe that also there you will see Japanese corporates probably looking to deploy more assets outside Japan, but also a renewed interest from foreign investors into Japan.
That was UBS CEO Sergio Ermotti speaking with Bloomberg's Stephen Engle at the UBS Greater China Conference in Shanghai, bringing it to you here on the Daybreak Asia podcast. Thanks for listening to today's episode of the Bloomberg Daybreak Asia Edition podcast. Each weekday, we look at the stories shaping markets, finance, and geopolitics in the Asia Pacific. You can find us on Apple, Spotify, the Bloomberg Podcast YouTube channel, or anywhere else you listen. Join us again tomorrow for insight on the market moves from Hong Kong to Singapore and Australia. I'm Doug Krisner, and this is Bloomberg.